Good afternoon, this is Sean Golding with Golding & Golding, here to jump in a little bit about Form 5471 and some of the related issues, especially for U.S. persons who are foreign investors these days. With the globalization of the U.S. market, there are many U.S. persons, which means U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test, who may have investments in multiple countries. They may have one business or several businesses scattered across the globe. So first things first, we're dealing with individuals. And for individuals, the three categories are going to be U.S. citizen, lawful permanent resident, foreign national who meets the substantial presence test. Some of the different types of investments and assets that a person might have could be a foreign business, foreign entity, LLC equivalent, foreign trust, foreign bank accounts, savings accounts, investment accounts, securities, life insurance policies, pensions, and they're all kind of intertwined with the foreign entity. Some of the forms that someone may have to file is the FBAR, the Form 8938, 5471, 3520, and 8621. Some taxpayers may qualify if they're a U.S. resident living in a foreign treaty country. They may qualify under the treaty to be a non-resident alien for U.S. tax purposes, which means they only get taxed on their U.S. sourced income, but IRS takes a position that all those international forms are still required, although recent litigation fell in favor of the taxpayer on the issue of whether they have to file an FBAR if they qualify under a treaty election to be treated as a non-resident alien for tax purposes, something to keep in mind. Some of the common 5471 issues. One is just having a foreign entity doesn't necessarily mean you're going to have additional tax. You may have to file the Form 5471, right? But for example, a lot of people like to throw around the term GILTI, global intangible low taxed income, but oftentimes there's a high tax exception. So if you're operating a company in a high tax jurisdiction, then you may not have any additional tax liability. There may be subpart F income depending on whether that corporation owns investments. For the individual, he or she may qualify under foreign tax credit, foreign earned income exclusion. But with a high tax country, you may have to file the 5471 and all those forms, but you may not have any additional taxes. The problem often comes in when you're in a low tax jurisdiction. The concept is the U.S. government doesn't want you going to offshore tax havens and opening up entities where there is no tax. So in these kind of situations, oftentimes the taxpayer may still have income tax implications in the U.S. They may have GILTI, which is the global intangible low taxed income, and the exception typically is not going to apply if it's a low tax jurisdiction. There are some other minimal exceptions as well, but for the most part, if you don't qualify for the high tax exception, it's difficult to avoid GILTI. In addition, when you're in a low tax offshore tax haven, oftentimes taxpayers will invest, that company will be invested in things like mutual funds, CCOVs, ETFs, things like that. Excuse me, that may lead to subpart F issues. And there may not be any foreign tax credits because you're not getting taxed in that country. A few common Form 5471 issues as well. A lot of people think you have to have more than 50% of a company to file 5471, but that's not correct. Even if you don't meet certain thresholds in the first year, once you have 10% or more ownership, then you may have to file the form. So for example, you're living in the United States, you're really cool grandma gives you 12% share of her company. It's a foreign company. It may not be a CFC, but you would still have to file 5471. In subsequent years, you may be able to file the 8938. In addition, when you inherit shares, even if you're not actively contributing to the business itself, if you're an owner, you may have a 5471 issue. Same with gift shares. There'll be a difference in terms of value depending on if it was gifted or whether it was inherited down the line when you sell it. Some related 5471 issues as well. It involves the other types of forms and assets, right? So the 5471 is a difficult form. It's complicated. There's lots of schedules, and then there's additional attachment schedules and things of that nature. Let's say your foreign entity has different accounts. So the entity, you may have to file an FBAR, Foreign Bank and Financial Account Reporting, may have to file a Form 8938 as well. You may have foreign investments, so we mentioned above, through your foreign entity, and this may lead to the FBAR and Form 8938, but it may also lead to Form 8621, depending if it's a holding company or if your company owns things like foreign mutual funds and ETFs, and this could lead to significant tax implications in any year that you're generating income that's being distributed with an 8621 PFIC, or if it's a holding company mutual fund that you redeem, things of that nature. Another final thing to keep in mind, just because you form a foreign entity as a trust, if you're operating it as a business, the IRS can take the position that you should have filed the 5471 instead of, let's say, 3520. The reason that's important is because even if you filed the one form, if you file the incorrect form, unfortunately the IRS can still come back and penalize you. For taxpayers who are out of compliance, there's various amnesty programs available to you. If you're willful, you would do the voluntary disclosure program. For now, they might be changing that program in future years. If you're non-willful, most taxpayers would either do the streamlined procedures, delinquency procedures, or reasonable cause. We got a lot of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter. It's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.